Most investors are staring at the same 10 cities, but a hidden migration map reveals 5 mid-sized hubs where the real wealth is being built right now. I'm your host, and I've spent years analyzing real estate trends. My team and I have crunched the numbers, identifying the best real estate markets to invest in 2026. With over a decade of experience in real estate investing, I've helped countless investors build wealth through strategic property investments. Today, I'll share the 5 secret markets that can generate 15% annual returns. These under-the-radar cities have high job growth, low entry costs, and a strong potential for long-term capital appreciation. By the end of this video, you'll know how to get ahead of the curve and start building your wealth in these hidden gems. Whether you're a seasoned investor or just starting out, this information will give you the edge you need to succeed in the 2026 housing market. Here is the cold truth. Most investors are fighting over the same 5 or 10 cities. You've seen the headlines, the new tech hubs, the boomtowns. But here is the problem. By the time a city hits the national news, the profit is already gone. You're not investing in those markets anymore. You're simply paying a premium for someone else's gain. Think about the math. When entry costs skyrocket, your cash flow vanishes. You're left holding a high-priced asset with a rental yield that barely covers the mortgage. That's not wealth building. That's a high-stress liability. And the worst part, while you're fighting for crumbs in overpriced metros, the real wealth, the 15% annual returns, is happening somewhere else entirely. There is a hidden migration map, a massive shift in where the high-paying jobs are actually moving for 2026. If you keep following the crowd, you'll get crowd-level returns. Average, mediocre. But if you can spot the pattern before the masses arrive, you don't just buy a property, you buy the future. The question is, do you want to be the one paying the premium or the one collecting it? Stop fighting for crumbs in New York, LA, or Miami. The big players have already priced those markets to perfection. There's no room for 15% returns there. To find real wealth in 2026, you have to follow the migration map. We're looking for the sweet spot. High GDP growth, a rising professional class, and most importantly, low entry costs. Here are the 5 under-the-radar hubs where the math actually works. First, Huntsville, Alabama. They call it the Rocket City. Why? Because it's a global hub for aerospace and defense. You have an influx of high-earning engineers moving in, but the housing supply hasn't kept pace. The result? Massive rental demand and steady appreciation. It's a blue-chip market disguised as a mid-sized town. Second, Columbus, Ohio. This isn't just about a few new jobs. We're talking about one of the largest semiconductor investments in history. When Intel builds a mega factory, thousands of high-paid contractors and executives follow. Buy in the surrounding suburbs now, before the full wave of employees hits the rental market. Third, Greenville, South Carolina. Greenville is the ultimate lifestyle migration play. People are fleeing the coast for lower taxes and better quality of life. But unlike other vacation spots, Greenville has a diversified industrial base. You get the stability of a corporate hub with the growth of a tourist destination. Fourth, Indianapolis, Indiana. Indy is the logistics capital of the Midwest. Every package you order likely passes through here. With the rise of e-commerce, the demand for workforce housing is skyrocketing. It's a cash flow machine. The entry price is low, and the occupancy rates are rock solid. Fifth, Knoxville, Tennessee. Knoxville is the gateway to the most visited national park in the U.S. But the secret is the growth of its tech and medical sectors. You have a dual income stream here: long-term professional rentals and high-yield short-term vacation stays. Now, you have 2 ways to play this. If you have the time, you buy direct. But if you want truly passive income, look into REITs that specialize in these specific regional growths. It allows you to own a piece of these cities without managing a single toilet or tenant. Just remember, in these high-growth zones, protecting your asset is key. Don't skimp on investment property insurance. One storm or one bad tenant can wipe out your 15% return if you aren't covered. Now look, not everyone wants to fly across the country to manage a rental. If you want these returns without the landlord headaches, look into rates. It's the fastest way to get exposure to these growth hubs passively. I've linked my top-rated REIT platforms in the description. But if you are buying physical property, don't leave your equity to chance. Getting the right investment property insurance is the difference between a 15% gain and a total loss. Check the link below for a quote from my trusted partner. By following this migration map, you're not gambling. You're positioning yourself where the money is already moving. If you want more data-driven plays to build your passive income empire, hit that subscribe button and turn on notifications. Stop following the crowd. Start following the data. See you in the next one.